fascinating research note from Morgan Stanley, titled Tesla Robotaxi, the first step in shifting the core business. Note they ask, the first step. They're already thinking about humanoid robots in the very title of this note. You'll love to see it. Elon Musk says that Tesla will unveil its Robotaxi on August 8th, an announcement that coincides with reports that the company is delaying the launch of its highly anticipated, affordable $25,000 vehicle. We first began writing about the investment considerations of a potential Tesla Robotaxi business since we began modelling Tesla mobility back in 2015, when Tesla's market cap was barely $30 billion. And to Morgan Stanley's credit, they also, in 2018, I believe, 3 years later, published a bear case scenario for Tesla, which split adjusted, I believe, valued the company in the worst case at about 66 cents per share. That's split adjusted. I don't know why I mentioned that. We had mistakenly expected the company to formally launch a highly automated rideshare service back in 2018. Nearly a decade later, we're still waiting. August 8th will offer some important clues. Well, we believe Tesla has many attributes that can make it a formidable player, if not an outright winner. Spoiler alert. The comment in parentheses here is on point. In the race to autonomy. We believe the more material commercial scaling of the business would be well beyond 2030. Now, in fairness, the impact that Tesla autonomy has this decade is going to be dwarfed by the impact next decade. This is fairly obvious. There's only so many vehicles Tesla can put on roads between now and the end of the decade, plus their existing fleet. Only a percentage of those will be operating as robotaxis. So obviously, into the 2030s, as Tesla continues to pump out vehicles that become autonomous robotaxis, recurring revenue, Tesla taking a cut of the fares, plus the cost of the actual FSD software, if they're owned by a third party as opposed to Tesla, will continue to pile up. Our thoughts on what we may see and not see at the August 8th Robotaxi unveil. Number 1, a recognition that making and selling electric vehicles in a traditional consumer model may not create lasting economic value. In terms of generating a firm's cost of capital, the auto industry is one of the most difficult industries in the world. By the way, this is true. Oh, and here's a thought. Imagine being a company trying to compete in one of the most difficult industries in the world against one of the most incredible companies on the planet who already have industry-leading scale and profitability producing electric vehicles, which everyone's going to be buying in the future, called Tesla. Not a task I would be signing up for. Imagine trying to compete with a Musk-led company in any industry, let alone some of the most difficult and competitive on the planet. Bro, low-priced and entry-level electric vehicles are likely to be the fiercest sub-segment. The next thing that they expect at the Robotaxi unveil, that it will be a recruiting exercise. Obvious things are obvious. As many competing autonomous vehicle and robotaxi efforts get scaled back or cancelled, i.e. Apple Car, and believe me, there's going to be more to come. I had a fascinating conversation with my dad last night, actually. We're talking about, he'd seen some supposed robotaxi with LiDAR. He was roasting it, the sensors, how ugly it was, how expensive. Hilarious stuff. Even he gets it. Conversation boiled down to, why do they need LiDAR when cameras work? We've got eyes and humans. Apple does not fall far from the tree. No pun intended. Musk warned a few years ago that companies pursuing autonomy using LiDAR was a fool's errand. They still haven't figured this out. They're still, wait for it, going down a blind alley. So expect the companies that have vehicles on roads with a clusterfuck of unnecessary sensors doing glorified party tricks in pre-mapped, geofenced areas to drop like flies. And as a result, we would expect to see hundreds or thousands of world-class robotics and AI engineering talent looking for their next project. Among an increasingly intense battle for talent, we believe Tesla may represent a potentially attractive destination. The third thing they expect, path to commercialization of true robotaxis, no steering wheels, at scale, will be both long-dated and volatile, in our opinion. While we are prepared for Tesla to unveil an actual physical robotaxi prototype this summer, we would urge caution on potential commercialization timelines for a fully autonomous taxi service. While we are bullish on the long-term growth of level 4 and level 5 autonomous cars, can't people just... Why do we need this dumb terminology, right? Delete the fucking L shit, okay? If it can drive you safely, you can go to sleep. That's an autonomous vehicle. If it can't, it's not the end. Just call them autonomous vehicles, or better yet, robotaxis. We believe the adoption curve will be extremely logarithmic, with an inflection in adoption being much further to the right than many industry observers expect due to a host of legal, regulatory, moral, and ethical factors that are unmodelable. Now, I hear this narrative a bit. I don't buy it. When companies such as Tesla present a mountain of data showing how much safer their vehicles are than human drivers, regulators will look at the data and go, fuck, I can't argue with that. I don't want blood on my hands. Approved. Emblematic of a bigger shift in Tesla's business model to real-world, and hard technology, AI, and robotics. While Tesla is still currently largely covered by auto and industrial analysts on both the buy and sell side, by the way, this is true and may explain why many, if not most analysts, in my extremely unhumble opinion, do not know what the fuck they are talking about, what they are looking at when it comes to Tesla. They see the world through automotive coloured lenses. Oh, Tesla's a car company, so let me think about it as a car company. Some of them literally describe their worldview. Tesla is just a car company. Doesn't have any technology that Toyota doesn't already have. Should be valued like an automotive manufacturer. What's the saying? When you're a hammer, everything looks like a nail. And when you're an automotive analyst, Tesla looks like just a car company. We expect over time investors will witness a shift in the company's business model at the margin to a more asset-light, software-based recurring revenue model. While Tesla's 5 million cars, by the way, it's actually 6 now, represents the population of probes collecting visual data from the edge of neural net training, we see a range of adjacent applications for capturing pattern-of-life data from the real world with relevance to end markets from aviation to robotics. By the way, make sure you're sitting down for this. Some markets, such as humanoid robots, address the $30 trillion global labour market. See, they hinted at this at the very title of this note. Now they're talking about the $30 trillion global labour market. By the way, that's at today's size. If more labour is added, guess what? That number increases. Staggering opportunity. August 8th may serve to reignite the conversation around whether Tesla is worthy of inclusion in an AI conversation or portfolio or not. Our overweight rating is underpinned on the assumption that Tesla can ultimately capture value in the area of custom silicon at exaflop scale, solving some of the world's most challenging problems, e.g. autonomy, offering a gateway into vast, untapped commercial potential. Did someone say decatrillion-dollar opportunity? Tesla's in-house computing efforts aside, Dojo, Tesla may be one of NVIDIA's very largest customers. Have investors stopped to think about why that might be? Now, this is a great question. Some of us have, although it does beg the question, why would just a car company be buying an absolute fuck ton, in fact, gigafuck tons of AI training computers from NVIDIA and also have developed their own if they're just a car company? Key assumptions behind our Tesla mobility model. Tesla Mobility is our mobility as a service unit of Tesla that is a pay-as-you-go or subscription-based rideshare network like Uber. At first, using human operators of highly automated Tesla vehicles, migrating to fully autonomous robotaxis over successive generations, including through partnerships with other ride-sharing firms and or other OEMs through technology and network licensing arrangements. Getting a bit jargony here, but spoiler alert, FSD licensing, anyone? That's what they're talking about, at least in part here. Again, on the record, Ford will be the first major US automotive manufacturer to announce FSD licensing deal. Put a pin in it. And once again, great opportunity to plug my prophetic Tesla valuation model, first published in 2021, which included FSD licensing as one of the key drivers of Tesla's valuation. You can find the latest version of that valuation model on Patreon. Click the link in the pinned comment to join at the investor level and above. You can see all my assumptions, including how many robotaxis in the fleet when they first start operating in each different scenario, cost per mile, profit, all that shit. Everything that matters in the valuation model. We forecast the inauguration of the service by 2026 with 1,000 units in operation. Now notice this. They said by, not in, by 2026. This is not a mistake. Now I know not everyone watching, all the guys speaking, are great at math, so let's do some counting. Ready? It's already 2024, so let's count. 2025, that's 1 year. 2026, that's 2 years from now. Morgan Stanley, we've got to give them credit for the courage here, believe that the Robotaxi service, Tesla's Robotaxi service, launches with a fleet of 1,000 units within the next 2 years, which totally explains why Tesla stock's down, 50+% from all-time highs. By 2030, we forecast 157,500 units, which would be 0.6% of Tesla's global fleet, which is based on their estimates of Tesla's global fleet size, rising to 1.7 million units by 2035. By the way, fuck, it's so good to see dates like 2035 in a note discussing Tesla. Once again, at this time, we expect the vast majority of Tesla's mobility fleet to be human operated. Strong disagree, but hey, let's see what happens. We forecast mobility to be less than $1 billion in revenues by 2027, reaching $17 billion in revenues by 2030. Revenue is driven by our forecast of Tesla Mobility achieving 9.5 billion miles a month by 2030, which would be 0.07% of total miles traveled on the planet, rising to 119 billion miles per month by 2035, which would be a 10x from that point to 0.7% of all miles traveled. Call me crazy, but I think maybe Morgan Stanley are underestimating this just slightly. We value Tesla Mobility at $61 per share. This is roughly parity with our valuation of the core Tesla auto business at around 20% of our $310 price target. And as I record this, Tesla stock with a market cap of a little over $500 billion and a share price of just over $170 is a long way from 310. Now we've got a little bit of a graphic here that we'll look at. Tesla Future, regularly recurring asset-light business in a $10 trillion, that's decatrillion dollar total addressable market. The short summary here, Tesla today, very small addressable market, very hardware heavy sales, lower margin. Tesla in the future, 10x in total addressable market, and a shift to services and recurring revenue, e.g. asset light, as in high margins, as in printing fucking money. Tesla is one of the world's most vertically integrated manufacturers, and its total addressable market today is totally dominated by the one-time point-of-sale automotive business. Core to our overweight thesis is the ability for Tesla to move the needle incrementally towards more capital-light models, e.g. printing money with software as opposed to with hardware, and incrementally away from the auto business. While we do expect autos may be the majority of Tesla's revenue for the next decade, by the way, I wonder if they're going to mention energy at all, growing at a staggering rate. We believe software, content, and licensing opportunities, there it is again. By the way, my prediction is it's not just FSD that Tesla will license, but also their vehicle OS over time, will become increasingly important to the model, as well as expansion into markets beyond the point of sale of vehicles. A 5-fold increase in potential monthly active users, represented by its vehicle fleet increasing from 5 million today to over 50 million by 2034, is an important driver here. At the current share price of $173, Tesla trades at 63 times consensus 2024 PE. As is typical for Tesla, this, by the way, is hilariously on point. The level of investor sentiment tends to follow the share price as opposed to the business. This is really important. It's absolutely on point. You may, in fact, even see emotional outbursts from people whose entire world seems to be driven by sentiment and emotions when Tesla stock's down. Elon bad, do something! And the polar opposite, when the stock's surging. The drop in Tesla shares has influenced investor sentiment, reinforcing the share price move. In the wake of weaker Q1 delivery results and expectations of a pushed out or cancelled Model 2, an increasing number of investors are preparing for a potentially difficult few quarters ahead, including potential cash burn and operating losses. By the way, this is the perfect setup with Tesla on the cusp of solving autonomy and the Robotaxi's awakening. This is the perfect situation. You couldn't have planned this better. Couldn't have scripted it better. Scamdemic, shutdowns, insane financial stimulus, interest rates through the roof, staying high, cyclical automotive business, shit hitting the fan, Elon bad, buys X, Elon bad, Biden administration, hate Elon, Elon bad. Oh, by the way, did I mention Elon bad? Tesla moving pricing, margins down, panic about demand, panic about EV transition, ICE vehicles here to stay, hybrids are the future, blah, fucking blah, blah, blah. And a very sentiment-driven stock. Once again, I just want to say shout out to the one true Sky Daddy, the flying spaghetti monster, for answering my prayers. Still buying with every spare cent at much lower prices than I would have expected, and I am not complaining. In our opinion, for Tesla's stock to halt its slide and re-establish leadership, investors will need to see one or more of the following. 1. Stop missing numbers. Tesla 2024 consensus EPS forecast stood at $7.30 18 months ago, and today it's $2.76. Could Tesla lose money in 2024? It's an auto company, right? So the answer is yes, very possibly. 2. Execute the model expansion beyond S3XY. Cybertruck is worthy of conversation, but not a big needle mover, in our opinion. If Tesla is really pushing out their next generation vehicle, launch and expectations, that would leave a very large gap in the market expectations for top-line growth over the next few years. What fills the gap? Expand the total addressable market incrementally towards more capital-light businesses. We believe Tesla's business model is at maximum capital intensity and maximum auto today. By the way, I think this is fair. Over the next 6 to 12 months, we look for further evidence of the business model moving towards more capital-light projects, e.g. licensing, software, here's that word, licensing again, that have relevance beyond the auto market. And 4, idiosyncratic narrative change. For Tesla to defend its current multiple, we believe the company must show a credible link to the AI theme through tangible products that drive improved consumer experiences in autos and other markets. Say, for example, FSD and their pursuit of Optimus. So, what will the next price move be? Ooh, look forward to seeing the crystal ball here. The answer is, by the way, no one fucking knows. We believe it will come down to whether or not Tesla is able to achieve one or more of the above. We believe investors will show a willingness to believe in the long-term total addressable market and profit potential of the company, but are unlikely to take further downward revisions in earnings and free cash flow forecasts without cramming down the multiple, e.g. dumping Tesla stock. While Tesla may have achieved its iPhone moment with the Model 3 and Y, it is yet to reach the App Store moment, which is critical to unlocking high margin, high multiple, highly recurring revenue. By the way, this is a great point, great analogy. Think about it. While much attention is understandably paid to the growth of Tesla's annual unit deliveries, we are infrequently asked about the growth of Tesla's installed base and monthly active users, e.g. the vehicle fleet. And this is a very interesting insight. Morgan Stanley talked to a lot of institutional investors, the world of Wall Street, weirdly asking, what's happening to Tesla deliveries? And very little conversation about, how many vehicles do they have on roads? How many monthly active users, software? Like I say, when you're a hammer, everything looks like a nail. A lot of hammers looking at Tesla going, just a car company. Let's ignore everything else. See below our forecast of the growth of Tesla's car park. For those unfamiliar with the jargon here, park, P-A-R-C, is basically fleet size, from which we make assumptions on attach rate and average revenue per user that derives our revenue build for Tesla network services. We forecast Tesla's on-the-road fleet will hit 27 million units by 2030, 58 million units by 2035, and 100 million units by 2040. So just quickly wanted to throw some numbers out there. Tesla themselves are aiming for 20 million vehicles produced per year by 2030. Forget the date. Let's assume that Tesla does get to that milestone of 20 million vehicles produced and sold per year. Or maybe not even sold, maybe produced and retained and then operated as a Tesla Robotaxi fleet. It would take 5 years at that rate of production to build a fleet of 100 million vehicles. Morgan Stanley think that number, 100 million vehicle in the fleet, occurs in 2040. Something to contemplate. Why do we remain overweight Tesla shares? Spoiler alert, some brains and some balls. Oh wait, sorry, that is kind of the answer. Credit where it's due, but let's read their actual reasoning. We believe Tesla has significant attributes to be valued as an AI beneficiary, but the company must see a stabilization in the negative earnings revisions within the auto business first. We do not believe Tesla will get credit as an AI company as long as core auto earnings are being revised down. Now, this is so fucking funny. By the way, their reasoning might be on point. I'm not laughing at what they think's going to happen, but just think about the rationale behind this. For this to be true, how brain dead do people need to be? We do not believe Tesla will get credit as an AI company, which, by the way, you would assume that Tesla would get credit for being an AI company by demonstrating its AI capabilities, right? Like FSD, you'd think that's the reason why people go, that's AI. No, but according to Morgan Stanley and their reasoning, and they do talk to a lot of investors, they believe that people will completely fucking ignore what's before their very eyes if it's got anything to do with AI if earnings from Tesla's automotive business are being revised down. This is so fucking funny. They're probably right. Just think about how fucking ridiculous that is. How blind, how stupid people could be to disregard what Tesla's doing with AI because they're too busy panicking about something else. Hey, look over there. Automotive business. Let's ignore it. That's not AI. What AI? No. Automotive business. Gross automotive margins. Demand. EV transition. Oh my God. End of the world. Fuck. This process may take a few more quarters to see through, over which time our $100 bear case may be in play. Amidst the seemingly overwhelmingly bearish institutional investor sentiment, we reiterate our overweight rating on Tesla with a $310 price target, not far off a doubling from where Tesla's stonk is today. Our thesis on Tesla is that it is both an auto stock plus an energy stock. Yay, they did mention energy eventually. Plus an AI and robotics company. I think it's fair to say that the majority of investors right now looking at Tesla and they're only seeing auto stock, ignoring energy, ignoring AI, ignoring robotics, ignoring a lot of things. The stuff that really, really drives the value of the company in the future. In fact, our valuation of the core automotive business at $62 a share represents just 20% of our $310 price target. Negative developments in the global EV market very much matter to Tesla and should reasonably have a negative near-term impact on the price of the stock. At the same time, however, we believe investors should not ignore the continued developments of Tesla's other plays, many of which are auto-related, i.e. the recurring revenue opportunity from the Tesla fleet, which, again, Morgan Stanley say that no one ever fucking asks them about. Weird. Embedded in our Tesla network services valuation, and other areas that we do not include within our $310 target, but that the market may include, i.e. Optimus, which we expect to learn much more about during the 2024 Tesla AI Day. So note, this does not include any humanoid robot in the valuation. It is my unhumble opinion that the potential scale of Optimus, and this isn't just my feeling, I've thought about the numbers and modeled things out. Humanoid robots are at least an order of magnitude greater in terms of the financial implications, probably multiple orders of magnitude, but I don't want to get laughed off the internet, so I won't say that out loud. Oh, wait, I just did. And then autonomy. And autonomy makes Tesla's automotive business look like a rounding error. Just imagine if Morgan Stanley were including Optimus implications in their price target. They've explicitly noted it's an exclusion. And again, at the very beginning of this note, a strong hint. Tesla Robotaxi, the first step in shifting the core business. Quite clearly, humanoid robots will be the following step. Fascinating note here from Morgan Stanley. Some great insights, including some of the mindsets of institutional investors, sentiment, and some impressively long-term discussion. Once again, got to give credit where it's due for these folks not chasing Tesla's stock down, while many of their colleagues are doing exactly that. Now, is it just me? Or are we hearing a lot more about autonomy lately? I kind of get the feeling that, I know it's very unscientific, but sentiment is, we're kind of starting to get to the beginning of a shift in the conversation from Tesla's just a car company, grows automotive margins, to not if, but when do robotaxis happen? Might take a while for this narrative to play out and the sentiment to really shift, but is it just me? And don't forget, you can see all of my assumptions around robotaxis and the humanoid robot in my Tesla valuation model, available on Patreon. Click the link at the pinned comment and join at the investor level or above. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. It's an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. Certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, This is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, snake oil salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links at the pinned comment, see you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.